Good morning, good afternoon, and good evening to those of you around the world. Welcome to the daily Trade the Chain crypto update, where we give you everything you need to know for the next 24 hours and hopefully the next few days. Today is Friday, September 1st, first day of the month. And of course, we do have Labor Day, on Monday. So very much a weird start to the best place to start, in my opinion, is, of course, with non-farm payrolls and unemployment rates. So just to break down each of these metrics, obviously, non-farm payrolls came in higher, so that's not really a good sign. But the unemployment rate also came in higher, which is a good sign in terms of what the Fed has to do. And then hourly wages came in lower than expected, which is also a good sign for what the Fed has to do in the future. So kind of like 2 out of 3 feathers in the Fed's cap. But it's also on the other side of this is signaling that a recession may be closer than expected, because obviously if unemployment rate is higher, heading towards 4%, that's not really good for the economy. But of course, we're in this, is good news bad news, is bad news good news kind of weird cycle where we want the Fed to have to do less, but if they're doing less, it's pushing us into worsening economic conditions. So that's kind of the back and forth that you have to contend with if you're thinking about this. So, how is it being reflected in the charts? Well, DXY is ripping higher. We're above the bearish trend. We're above the 103.6 resistance, and now we're staring down this high at 104.4. And of course, this resistance up here at 106 or 104.6. So it does look likely that it's going to end up tagging this. But is that after another drop back and equities rip higher, or does it just continue zooming up? I would say it's probably going to do something a little bit more similar to this if I had to guess. But of course, your guess is as good as mine. I'm just kind of betting on momentum and direction. So do think this will head higher, but we definitely could still chop in the 103 and a half to kind of 104 and a half area before we end up moving higher. But of course, it does move higher. Definitely bad for risk. If it moves lower, it'll definitely put some wind in the bears sails. So I'm sorry, higher is bearish, lower is bullish. So I'm sorry, just a little bit frazzled with so much going on. But let's check out. So we're looking at NQ. I typically look at S&P 500 futures, and most of you will know that if you've been following me for a while. But interestingly enough, so one thing that I think has been interesting, and you can really track this, week over week, but anytime you see massive buys or sells like that, it typically will end up playing through into the next session. So we saw a massive sell at the end of yesterday's session, and then, got bought back up a little bit, and someone sold, massively again early in the session at that 45 number, and then we drop back to 45.11. So if we drop from 45.11, we'll tag 4,500, 4,595, and then you've got these levels all the way down. But it's important to remember, if you drop below 44.95, we didn't trade too much area, right? So since we didn't trade too much in this area, I wouldn't expect this area to hold as support much. So if we drop below 44.95, 44.80, I'm pretty sure is going to be kind of a magnet. And then it gets a little bit difficult if, once we tag 44.80, or if we do, then that presents another set of trades. But so if we drop below 45.11, I would say we probably tag 44.80. And then, on the reciprocal, if we can get above 45, we've got, 45.60, and then you've got 45.90, 4600, all the way up there. So this will be an interesting battle heading into next week. I want to see what happens at the end of the day. If we get another big sell, maybe September start is pretty bearish, but that is obviously still yet to be seen. But with the DXY ripping higher, certainly doesn't bode well for equities. So we'll have to see how this plays out. I don't have a vision. I think whatever we see at the end, and then whatever we see early next Monday is going to set momentum for the week. And that could be down. So something to monitor, but I do not have a specific direction in mind for equities yet. But again, DXY certainly looking a little scary for the risk on bulls. So let's look at Bitcoin. Not looking very good. We did break out of the OI kind of trend that I drew yesterday. Now we are back in it. Interestingly enough, so people are making bets, but We definitely, you know, as we told the TTC community today, you drop below 25.9, 26, you're going to tag 25.6. We of course did that. This does not look very promising, but you know, we did sweep both yesterday's low, and we I don't think we swept. That's Tuesday's low. And then we, well, where's Monday's low? I'm getting, so this is Monday right here. Yeah, so we swept both yesterday's low and we swept Monday's lows. So typically you'll see some bulls try to step in and bring this higher, but you know, double tweezer after a drop, you know, if we drop below 25.6, 20.7 again, in my opinion, we are going to end up dropping to 25K, which, or 25.1, 25.2, which is the low that ugly Thursday that we saw. So very much something to consider there, but you'll definitely see some bulls try to step in and survive this, as we basically swept the weekly lows for this week. And then of course, if we break below the 25.6 level, then you've got basically 25.1 to hold you, or things get really ugly. So very simplistic trading for Bitcoin. Get back above 26K, long it up to 26.2, 26.3, get back above there. We can start talking about 26.7 again. And then of course, you know, maybe 27K, grab these lows. But in my opinion, it's a bit wishful thinking right now, although anything could happen. Maybe we sweep this level again and then move higher to squeeze some shorts. Anything could happen, but it, you know, again, play it level to level. You're sitting in a range right now. Break below the lows, short, rubber, you know, sweep the lows, long, sweep the highs, shorts, break the highs, long. So it's very simplistic trading right now. You don't have to confuse it too much. Just be and play it level to level. And then very similar for ETH, you know, again, level to level. We swept Monday's low. We swept yesterday's low. We're still trading around Monday's low. We're trading under yesterday's low. So things, again, not looking good for ETH. And we did tell the TTC community, break below 1640, going to probably hit that 1617 number. Of course, we did. So now we're on to the next set of the trades. A sweep, typically, you know, if you sweep and hold, you'll long it back up to 1640, break above 1640, trade it back up to 1665, and then break below 1620. And then you're going to grab these lows down here, which is, you know, 1580. And then we still have those, you know, those lows from that big dump the other week at 1550. So again, easy level to level trading. Sweep the 1617 level again, long, break the 1617 level again, short. And, you know, you can play it pretty simplistically. But again, this is also going to be, this is Labor Day weekend. So, you know, America's, you know, a vast majority of typically volume and interest. So if everybody's away drinking beer and grilling burgers and hot dogs, then probably not going to be too much volume on the chart. So could see some trickery, and it's always best to, you know, play it careful, play it patient during the weekend. But if you are alone, you're bored, you're not planning on doing anything, just relaxing, and you're staring at some charts, level to level trading will set you free, in my opinion. So that's the outlook for the weekend. Don't want to confuse it too much. Very simple. Break the lows, short the lows, sweep the lows, long it. And then we, you know, we do the thing for the next level, depending on if we move higher or move lower. So with that being said, good luck, happy trading. We probably won't be doing any videos on Monday for Labor Day, but we'll of course catch you next week for more crypto action. Good luck, happy trading.